Hello, from LPL Financial. Welcome to The Talking Point. I'm your host, Quincy Krosby.
Good morning, everyone. It's Quincy Krosby. This is The Talking Point. It's Tuesday morning. The market hasn't opened yet. It's June 21st, but it looks like we're going to have a strong open. And we had a very difficult week last week. There's no doubt about it. The Fed came out and not surprised us. What they did was they surprised us in that they, during a blackout period before the actual Fed meeting, delivering messages somehow to the news outlets. Many said, initially the Wall Street Journal, but before long, within maybe a half an hour, all of the news outlets had said Fed moving to 75 basis points, rather than the 50 basis points hike that they had telegraphed for so long. Why did they change course? Why all of a sudden getting even more aggressive? Well, it was the CPI report that came out that indicated, as clear as can be, that inflation was climbing higher and it was broadening. And then the Friday before the Fed meeting, you also had that same day, right after the CPI report, that was the Consumer Price Index report, that came out, and that was the University of Michigan Consumer Sentiment. And that was the initial report. Remember, they do an initial report, and then they come out with their full report, and that will be actually this week. But what was in that report about U.S. consumers? It had to do with expectations for inflation, and that inched higher. And that got the Fed's attention, because what you don't want is all of us, we're all the consumer, to suddenly think, well, over the next 5 years, inflation is just going to keep going up, up, up. And then you get into a mindset of, buy it today, because tomorrow it's just going to be more expensive. That is, and when you see countries where inflation is terribly high, double digits high, you have hoarding going on. So in any event, that got the Fed's attention, and then they decided, let's not wait until the July meeting. We don't want to wait 6 weeks. Let's go in now with 75 basis points. Well, what happened when they did that last week? Suddenly, recession talk just was all over the news. The Fed is going to lead us into a recession with their aggressive rate hikes. What that then does, for example, is it leads to oil prices coming down, correct? Because after all, if you have a recession, people lose jobs, they're not going to be driving as much, and so on. Well, right now we're seeing oil come back up. I'm looking at it last night. The West Texas Intermediate crude up. This morning, oil prices are up. Why? Why would oil prices be up if the market believes that the Fed is going to be more aggressive? And in fact, for the next meeting in July, right now the Fed funds futures market is pricing in, again, 75 basis points rather than 50 basis points for a hike. The reason is, one, the U.S. government, the Biden administration, is talking about a federal tax holiday. Now, granted, it's only 18 cents a gallon, but when you couple that with local and state tax holidays, which are also being actually implemented across the country now, altogether, what you would have is, if you filled up once a week, you would actually save about $30 a month. So that's one of the moves that the administration is talking about. And then what that would do would obviously have people drive more. So maybe it would be just the opposite of what they want, but the fact is it could bring down prices just a bit. The president's administration had oil come from the Strategic Petroleum Reserve. That really didn't do anything. You saw prices move higher. The other thing is the president is going to Saudi Arabia. Saudi Arabia is the de facto head of OPEC. And as you saw, yes, they increased up the pumping of oil. They announced at the last meeting. But all they did was move forward the increased oil production that they would have had anyway. Remember, they're going from pre-COVID oil, then during COVID, hardly any heavy pumping. And now they're trying to move to pre-COVID, and they had a schedule of increases in production. All they did was move 2 months forward. So the president, ostensibly the meeting is to mend relations with the Saudi family and also create a peaceful environment in the Middle East. However, the expectations are that the administration is trying to have OPEC come out and pump even more oil. There's no doubt about it that that's probably the basis for this meeting. In addition to that, you may have seen from the administration urging energy companies to bid on these auctions for land, for drilling. And there's another element, and that is going around and saying, hey, you guys are making a lot of money. Why don't you lower prices? Why don't you produce more? The fact is we do not have enough refineries. We haven't built a refinery in years. That's just the way it is. But in any case, in terms of energy, in terms of oil, if that's the view that you want to lower the price of oil and you're doing everything in your power to make that price at the pump lower, you're going to see Americans obviously take advantage of it and drive more. And so the more we drive, the more you push up the price of oil. I hope that is clear because it's the opposite, right, of what the Fed wants to do. They want to bring the price down and not have it go back up, not have us drive more. They want us to curtail our driving habits because they want to bring down inflationary pressures. So that's what you have. So this week is a very busy week in terms of the Fed. One, they're all out there talking. So whom am I listening to? I'm listening to Powell because he's going to be up at Capitol Hill this week. He will be testifying before the committee that focuses on the Fed and the economy at the House of Representatives, and also another meeting the next day will be at the Senate. Keep in mind, he is going to be drilled, especially on the House level, because the one thing they don't want is to see the Fed, and they'll probably talk about this right up and say, are you leading us into a recession? So it's going to be very interesting to see how he answers their questions. The House in particular, this is the House of Representatives, have no qualms about getting right into the nitty-gritty of it. The Senate tends to be more, a little bit more cerebral about it. But the House, they worry about their constituents, and they don't want to see their constituents moving into a recession and perhaps losing jobs. But remember that Fed's view on this is you've got to restrain inflation, because if we don't do it, we know it's painful, we know it's bumpy, but we must do it. So that's going to be something I think that's quite important for the market this week, to hear him up on Capitol Hill. In addition to that, I want to mention that we had the earnings report from Lennar. You know that they are a major home builder. They were very clear that they did well in the second quarter. But what they started to see was what they called folks thinking about it and then pausing. Why? Because of the higher mortgage rates. And in fact, this is what the Fed wants, right? They want prices to come down. And in fact, at the end of the statement that they put out, they said, look, we're doing share buybacks. We've got a very strong balance sheet. We are going to be all right in this. But nevertheless, the higher mortgage rates are pushing us toward a rebalancing between rates and prices. So this is what we're seeing across the industry. And Lennar, as I said, is one of the strongest. So I've been waiting to hear what they had to say, and they said it, right? That there are obstacles now. People are waiting. People are concerned that they'll have to pay more each month, and that they're waiting for prices to start to come down even more. This week also there is a speaking of home building, there are a litany of house-related numbers coming out, releases. And for example, existing home sales today, we are also going to have during the course of the week, we will also have new home sales at the end of the week. So it's going to be an interesting week to see, because all of the data that are coming out are showing a slowdown in the home building, home expectations, home builder expectations, all coming down as interest rates rise. This week also, we are going to have on Thursday, we're going to have a flash report, meaning it's preliminary, and that will be in U.S. manufacturing and also the U.S. services. So far, they are holding up, but they are holding up over the 50% mark. Remember, 50 is the level above which you're expanding, below which you are decelerating. So they are in the expansion above 50. And I don't want to say 50%. 50 is the level. We want to see what this preliminary report has to show. Remember, we're always looking for new orders, and we're looking for hiring expectations. So on Thursday, it will be what we call a flash report. It means that it is a preliminary report. Also this week, which I think is going to be extremely important for the market, because this is the final look at the Michigan Consumer Sentiment Index. Remember, it was the preliminary University of Michigan Consumer Sentiment Index that came out just after that Consumer Price Index that really got the Fed's attention and made the decision for them that they needed to go to 75 basis points. And again, to repeat, it's that important that consumers were indicating that over a 5-year period, they saw inflation moving higher. What you don't want to see is this becoming entrenched. That because when something becomes entrenched, it's difficult to change the mindset. So this will be coming out on Friday morning at 10 o'clock. It's the University of Michigan Consumer Sentiment Index. It's the final report. I'm going to be paying attention to it. Everyone is going to be watching this. And the reason is you don't want to see it climbing higher. You want to see it stall where it was, which was just above 3%, or you want to see it pull back. So let's keep our mind set on that, because if you know that that's what the Fed is looking at, the market is looking at it as well. So awful lot of Fed speak this week, but we're going to listen to what Chairman Powell says. The Fed funds futures market is indicating for the Fed meeting in July that we are looking at another 75 basis points. We'll see if anything that comes out of the Federal Reserve speaking tour this week and Chairman Powell changes that. Have a very good week. Please don't hesitate to call. And let's enjoy today's rally. We'll see if we can close higher. We'll see if volume picks up. The market was deeply oversold, given the sell-off that we saw. And so, in essence, we were due for a rally. We were due for a bounce. But we'll see if it leads to something else. Thank you very much. Again, don't hesitate to call. Have an excellent week.
This material was prepared by LPL Financial. It's for general information only and is not intended to provide specific advice or recommendations for any individual. There is no assurance that the views or strategies discussed are suitable for all investors or will yield positive outcomes. Investing involves risks, including possible loss of principal. Any economic forecast set forth in the podcast may not develop as predicted and are subject to change. References to markets, asset classes, and sectors are generally regarding the corresponding market index. All indexes are unmanaged and cannot be invested into directly. Index performance is not indicative of the performance of any investment and do not reflect fees, expenses, or sales charges. All performance reference is historical and is no guarantee of future results. All information referenced in the podcast is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. Securities and advisory services offered through LPL Financial, a registered investment advisor and broker-dealer, member FINRA and SIPC. Insurance products are offered through LPL or its licensed affiliates. To the extent you are receiving investment advice from a separately registered independent investment advisor that is not an LPL affiliate, please note LPL makes no representation with respect to such entity. If your financial professional is located at a bank or credit union, please note that the bank or credit union is not registered as a broker-dealer or investment advisor. Registered representatives of LPL may also be employees of the bank or credit union. These products and services are being offered through LPL or its affiliates, which are separate entities from and not affiliates of the bank or credit union. Securities and insurance offered through LPL or its its affiliates are not insured by the FDIC or NCUA or any other government agency, not bank or credit union guaranteed, not bank or credit union deposits or obligations, and may lose value.